Hello friends, Jim here from AFS with another market update. Let's do a quick review of how we finished 2021 and give you something to consider in 2022. Well, the US stock market had a great year. Again, the S&P 500 reached 70 all-time highs during the year, the most since 1995, and finished up almost 27%. But that doesn't mean that all 500 stocks in the index did that well. In fact, in early December, Goldman Sachs reported that just 5 stocks, Microsoft, Google, Apple, Nvidia, and Tesla, accounted for 51% of the S&P 500's return since April. What's the takeaway? Well, I can think of a couple. Number one, the stock market remains a great place to build wealth over time. There are certainly other things that seem to get more headlines, stuff like cryptocurrencies, NFTs, sometimes even real estate. But let's not forget the good old tried and true stock market. Number two, with that being said, please don't get complacent. The S&P 500 has finished positive in 12 of the last 13 years, and history and statistics show that it cannot go up forever. We don't know when or how bad, but a sustained correction will come. Plan accordingly. Now something to consider. I've already had a bunch of financial coaching sessions with employees this year. A common theme I'm hearing is people analyzing the 2021 performance of the individual investments in their retirement account and wondering if they should make changes. I have a few thoughts. First of all, 12 months of performance is not necessarily a relevant or worthwhile factor when it comes to analyzing investments. I'd be curious about how the investments do over a much longer period of time and how they fared in a challenging market environment like the financial crisis of 2008. Number two, a diversified portfolio is going to have some investments that perform significantly better than others. That doesn't mean you should move your entire account into the one that did best last year. In fact, that would be the exact opposite of buy low, sell high. Last year's loser just might be next year's winner. Lastly, now might be a great time to sit down with a fiduciary advisor for a review and planning meeting. Ask your employer to help you set up a meeting with your company's retirement plan advisor. Assuming that person provides fiduciary advice to employees, to review your investment mix, savings rate, and your beneficiaries to make sure you're all set for 2022. It's like an annual doctor checkup for your finances. That's all for now. See you later on.